Welcome to the American Hard Assets Market Minute. I'm Ryan Kazmierski, your editor of American Hard Assets, and today we're joined by Jonathan Kosares of USA Gold. Jonathan, let's jump into the big news for the day. The market's down almost $25 for gold on news that Syria has accepted Russia's proposal to hand their chemical weapons over into international control. This takes the U.S. out of a possible aggressive war tactic and drives the market down. What are we seeing for the next couple of days?
Sounds good, Ryan. Good morning, by the way. How are you? We have this morning basically Syria accepting a Russian chemical arms offer, basically, where they came in and said to Syria, why don't you turn over your chemical weapons to international control to avoid a conflict with the United States? And that's exactly what they've agreed to do. So it definitely looks like the probability of war with Syria has diminished a great deal. And there was a certain amount of geopolitical risk element going into the price of gold and silver. So right now you have gold down a little over $20, about 22. It's trading right in the 1360 range, and silver's down about 70 cents, trading pretty much right at the 23 handle. What's interesting about it is that gold and silver both were charging a lot higher. They'd broken some of those technical resistance levels, like 1325 on gold or so. It was already pushing to 1400 when this whole Syria thing came about. So we're kind of overshooting it a little bit to the downside. But, I think when you think about speculators and you think about how they're going to treat this whole event, you're going to probably have some more short-term weakness because war off, geopolitical risk off is technically negative gold, although I think there's a lot more going on out there.
We talked a little bit about silver kind of trading on its own merit, opposite of gold a couple weeks ago, but it's pretty much just tagging along with gold again. What has caused that to happen?
Well, it's not so much that it was trading independent of it. It's just silver is more of a tail wagging the dog market, which just means that it trades more heavily on paper than it does in the physical market. It's less of an international market than gold is. And so what tends to happen with silver, it tends to go up faster than gold when they're both going up, but then down faster than gold when they're both going down. And so all you had was silver outperforming gold over a short period there, 3 to 4 weeks, where it really played a lot of catch up in the ratio. And then you have an example like today where silver is down, percentage-wise of 1.5 more than gold, basically. And so you're just having that exact manifestation of silver just going down faster than gold today.
All right. Well, I appreciate the time, Jonathan, and I look forward to talking to you again next week.
Sounds good, Ryan. Take care.